yung date of acquisition, uh, you have to learn how to come up, prepare consolidated financial statements on the date of acquisition or on the date of consolidation. No? Now, so between two entities yan, For example, company A acquiring company B. So date of acquisition, we are talking of date of acquisition. Now, the date of acquisition, dapat magpakita ka ng date of, statement of, financial statements as of date of acquisition. No? Papakita ka ng consolidated on the date of acquisition. Nagkaroon ng consolidation process. Now, ang tanong, paano kung merger? Nawala yung isang business entity. Ang nag-survive yung isa, the same pangalan ng parent. Yung acquiree, nawala. Ang nag-survive yung acquirer gamit yung kanyang original business name. No? Nagkaroon din ng consolidation. Kung ganon, you come up with the consolidated financial statements. Nagkaroon ng consolidation. Ngayon, kung yung acquirer naman nagtuloy ng operation, maaaring ang binili ng acquirer ay 100%, fully owned niya yung subsidiary, or partially owned, nagkaroon ng consolidation, gawa ka rin ng consolidated financial statements on the date of acquisition, no? So in all cases, nagkaroon ng consolidation process, at in all cases, on the date of acquisition, prepare ka ng consolidated financial statements. Now, a subsequent to the acquisition date, no? Kasi ang preparation ng financial statements monthly, no? Paano naman yung date after the date of acquisition? Ganun pa rin. Gagawa ka rin ng consolidated financial statements. Mapera kung nagkaroon ng merger. Nawala na yung isa. Okay? Hindi mo na kailangan maggawa pa ng consolidated financial statements. Wala ka nang ikaw-consolidate. Na-consolidate mo na noong earlier date. No? Nawala na yung existence ni acquiree B. So, ganun yun, no? Now, kapag nagkaroon ng business combination, nagkaroon ng consolidation process. At the date of acquisition, mag-prepare ng consolidated financial statements. Okay? Kahit pa nawala ang existence noong acquiree. Nagkaroon ng consolidation. Okay, so ang tatalakayin natin next is how to prepare the consolidated financial statements. In particular, the statement of financial position on the date of acquisition. No? Ibang chapter naman yung consolidated financial position subsequent to the date of acquisition. Iba naman yun, no? Yung nasusunod. And this evening, meron tayong 3 speakers to touch on the subject matter, preparation of the consolidated financial statement. Our first speaker, si Kate Ann. Kate Ann, nandiyan ka ba, Kate Ann?
Yes po, sir.
Okay. You may share to us what you have read, what you have studied. Share to us, to everybody.
Naka-share screen na po ba?
Yeah, kita namin. Maganda.
Okay. Okay. A pleasant day, everyone. I am Kate, and this evening, I will be introducing a new chapter. I hope we all get to understand what it talks about. So, Chapter 14, Consolidated Statement of Financial Position, Date of Acquisition, IFRS 10. Nature of consolidated statements. IFRS 10 requires that an entity that is a parent must present consolidated financial statements that include all subsidiaries of the parent. Only 3 exceptions to this rule are available, and these are: okay, ayon daw sa IFRS 10, kinakailangan ng parent entity na magpakita o maglabas ng consolidated statements. Nakalakip dapat dito lahat ng subsidiaries. Ngunit, ang sabi, mayroong 3 exceptions para sa rule na ito. So, dapat nakacheck mo na itong lahat na ito para ma-excuse ang parent from presenting consolidated statements. For the first one, a parent did not present consolidated financial statements if all of the following criteria are met. A. The parent itself is a wholly owned subsidiary or it is a partially owned subsidiary of another entity and all of its owners, including those not normally entitled to vote, have been informed about and do not object to the parent not presenting consolidated financial statements. Firstly, ano ba ang pinagkaiba ng wholly owned subsidiary at partially owned subsidiary? So, the wholly owned subsidiary is a company where 100% of its common stocks is owned by a parent company. While in partially owned subsidiary, the parent company owns at least 50% but less than 100% of the subsidiary share. So dito, maaaring hindi maglabas ng consolidated statements ang parent entity kung ito ay may ultimate parent pa, so subsidiary din ang parent na ito na may kanya ring subsidiaries. Dapat ay walang pagtutol in the part of the respective owners. Then letter B, its debt and equities instruments are not traded in the public market. Kinakailangan din na hindi traded sa market ang debt and equity instruments ng parent company. Kaya kung mapapansin nyo, available online ang consolidated statements ng, for example, Nestle, Unilever, kasi publicly traded sila sa SEC, so required sa standard. And then letter C, it did not file, nor it is in the process of filing its financial statements with the Securities Exchange and Commission. Like what I've said, dapat ay hindi naghain o nasa proseso ng paghain ng kanyang financial statements sa SEC o Securities and Exchange Commission ang parent entity. And then for the letter D, its ultimate or intermediate parent produces consolidated financial statements that are available for public use and comply with IFRS. Maaari din na hindi na maglabas kung meron namang ultimate parent itong lower level parent na ito na nakapagpresenta na sa publiko at sumunod naman sa pamantayan ng IFRS. Then for the second one, post-employment benefit plans or other long-term employee benefit plans to which IAS 10 employee benefits apply are excluded from the scope of IFRS 10. Dito naman, yung sakop ng employee benefits sa IAS 10, like post-employment and yung long-term employee benefits plan ay hindi sinasaklaw ng IFRS 10. And then for the third one and the last one, an investment entity need not present consolidated financial statements if it is required to measure those subsidiaries at fair value through profit or loss in accordance with IFRS 9 financial instrument or IAS 39 financial instruments recognition and measurement until IFRS comes into effect. Exempted din sakali na kailanganin sukatin ang mga subsidiaries nito at fair value through profit or loss alinsunod na rin sa IFRS 9. The consolidated statements present the financial statements of the parent and its subsidiary as those of a single economic entity. Consolidation working papers are prepared to facilitate the consolidation of the separate statements of the parent and its subsidiaries into a single set of consolidated statements. So, pagkasagawa ng consolidated statements, pinag-iisa nito into a single economic entity ang mga financial statements ng parent and subsidiary nito. So, ang presentation nito sa audience ay as one, but it is only during consolidation period. After nito, of course, separate personality or entity pa din ang parent and subsidiaries. Hindi rin basta-basta pagsasamahin ang separate financial statements nila, bagkus mayroong hinahandang consolidation working papers upang mapadali ang pag-combine o pag-consolidate ng mga financial statements nila. So, this chapter will discuss only the procedures necessary to prepare consolidated statements of financial position on the day that the controlling investment is acquired and the acquirer obtains control of the acquiree. The procedures for consolidating statements in period subsequent to the acquisition date will be discussed in Chapter 15. The effect of operating activities between the parent and its subsidiaries such as intercompany dividends, merchandise sales, and fixed asset sales will be discussed in Chapter 16 and 17. The principle of acquisition accounting presented in Chapter 13 is used in the consolidation process. So, sa chapter na ito, may babahagi sa atin ang proseso ng paggawa ng consolidated statement of financial position only the moment na mapasa kamay ni acquirer ang controlling investment at control kay acquiree. Again, acquirer means the one who obtains control, while acquiree is the one whom the acquirer obtains the control from. So, in this chapter, expect nyo na ang mapapag-usapan ay about the acquisition date alone. And then, yung mas pinalalim na topic and subsequent procedures nito ay on the succeeding chapters pa, such as chapters 16 and 17. Babanggit din ang topic from the previous chapter kasi part po yun ng consolidation process. In fact, the consolidated statement of financial position of a parent and its 100% owned subsidiary after acquisition looks exactly the same with that of the net assets being acquired. Then, conditions for consolidated statements. Generally, statements are to be consolidated when a parent company owns over 50% of the voting common stock of another company, thereby having a controlling interest. However, control may be achieved even with less than 51% of the voting common stock is owned by the parent. In such case, the consolidated statements may be prepared in view of the unified managerial control. Kadalasan, kung 51% pataas ang pagmamayaring voting stock, common stock ng parent entity of another entity, and therefore mayroon namang controlling interest, then statements are to be consolidated. Means, kailangan ng consolidation ng kanilang financial statements. Pero, there's such cases din naman na even with below 51% of voting common stock, ang pagmamayari ni parent, pwede pa rin siya magkaroon ng control. Kaya lang, ang preparation ng consolidated statements ay in the view of unified managerial control. So, ano bang klaseng control yun? Control. IFRS 10 introduces a new single control model to identify a parent-subsidiary relationship by specifying that an investor controls an investee when the investor is exposed or has rights to variable returns from its involvement with the investee and has the ability to affect those returns through its power over the investee. In this new control model, an investor controls an investee if and only if the investor has all of the following three elements. So, ang IFRS 10 daw ay may bagong pinakilala sa atin, which is yung single control model with the aim na mas maging identifiable at specified ang parent-subsidiary relationship. Ano ba ang elements ng control? A. power over the investee, the power. Ang main point dito ay yung power, and power arises from rights. Thus, the investor should have the power like yung voting rights. Kung mayroon nito ang investor, mayroong control over the investee. Letter B, exposure or rights to variable returns from its involvement with the investee, the returns. Dito naman, returns ang focus. Variable returns, ibig sabihin paiba-iba. It can be positive, negative, or both from the result of the investee's performance. Ano ba example nito? Dividends. Di ba pabago-bago ito and investors are exposed to this, especially if they are shareholders. So talaga involved sila sa investee, means may control ulit. And then letter C, the ability to use its power over the investee to affect the amount of the investor's return. The link between power and returns. Here, link between power and returns naman. Hindi lang dapat power over the investee, hindi lang din dapat exposure or rights on variable returns ang meron. Dapat kaya rin ni investor gamitin ang power niya to affect the investee's return. From the example kanina, dividends. So if kaya ni investor impluwensyahan ang board of directors about the amount of dividends to be paid, di ba? And their control
Wait lang.
really exists.
Sunog. Mami! Ano pag natapon pa niya?
Ang dami nagtatalita. At mo yung sa iyo. Ay, mute mo pala sa iyo.
Ano yan? Labente.
At tikat yung mic mo po.
Okay.
In this single control model, power is not defined as legal or contractual right to direct relevant activities, but is based on the ability to direct relevant activities unilaterally. The consolidation model is not a quantitative model based on risk and rewards, but a qualitative model based on power, returns, and a link between the two elements. The control model is built on the principles of three elements rather than on bright lines. As such, the application of this model will require judgment by considering the relevant facts and circumstances in making consolidation decisions. This consolidation model will more accurately reflect the economic substance of relationships with other entities. Dito sa single control model, ang ibig sabihin ng power ay kakayahan ng investor mag-atas o makaapekto sa relevant activities ng investee unilaterally. So, relevant activities are those that substantively affect the investee's return. Ang power dito ay hindi synonymous like yung sa legal authorities. Sinasabi din na hindi quantitative ang consolidation model, pagkus ay qualitative dahil more on involved dito ay judgments with relevant facts and circumstances na mas kayang magbigay ng accurate economic substance of relationships with other entities. Then, techniques of consolidated statement of financial position. On the date of acquisition, when the acquirer obtains control of the acquiree, consolidated statement of financial position is the only statement that is prepared to determine the initial financial position of the economic entity. This chapter will illustrate the techniques used to consolidate the separate statement of financial position of the parent and its subsidiary immediately on the date of acquisition. Dito sa topic sa chapter na ito, which is specified sa date of acquisition, consolidated statement of financial position or yung tinatawag nating balance sheet ang tanging statement na inihahanda the very moment na makontrol na ni acquirer si acquiree. At ito ay upang malaman agad kung ano ba ang magiging initial financial position nitong economic entity, kung ano ba ang magiging status ng assets, liabilities, and the like. May lalarawan sa chapter na ito ang mga pamamaraan o yun yung techniques na ginagamit in consolidating statements of financial position ng parent and its subsidiary on the acquisition date. Sabi dito, the basic procedure to consolidate the statement of financial position is to eliminate the investment account on the parent's statement of financial position against the stockholders' equity accounts in the statement of financial position of the subsidiary company. After this, the remaining assets and liabilities of the parent company are then combined with the specific assets and liabilities of the subsidiary company. So, ang panimula daw o mahalagang procedure sa pag-consolidate ng statement of financial position ay i-cancel out muna or i-eliminate ang investment account ng parent company against doon sa stockholders equity account naman ni subsidiary. Why? Kasi let's say si parent nag-invest ng shares kay subsidiary. Therefore, magkakaroon si parent ng account title appearing on its balance sheet sa non-current asset ng investment in subsidiary. Then, kung i-check mo naman yung books ni subsidiary, mag-a-appear sa share capital account yung in-invest ni parent. Eh di ba we're doing the consolidation? Ibig sabihin, as one na si parent and subsidiary. Si parent is not pertaining to other entity kasi as one na nga sila, ni subsidiary during consolidation. Then, after naman ito, pwede na pagsamahin ang remaining assets and liabilities ng parent company's specific assets and liabilities ni subsidiary company. Intercompany adjustments and eliminations are made on the consolidation working papers in the form of journal entries. These entries do not alter the individual statements of the parent and the subsidiary companies. Elimination entries appear only on the consolidation working papers. They are not recorded on the books of either the parent or subsidiary company. Procedural explanations for the preparations of consolidated statement of financial position on the date of acquisition are illustrated in the pages below. Dito sa intercompany, it means may transactions between the parent and subsidiary. For instance, nagbenta si parent ng inventory kay subsidiary. This is called downstream transaction. Ngayon, pwede din naman na si subsidiary magbenta kay parent. That is called upstream transaction naman. So may mga adjustments and elimination din kailangan na i-consider at usually in the form of journal entry siya. Ang elimination entries hindi yan makikita sa separate books ni parent and subsidiary. Sa consolidation working papers lang siya. Acquisition of assets and stock acquisition compared. In Chapter 13, the two methods of achieving control over the assets of another company are discussed. A company may directly acquire the assets of another company, or it may acquire a controlling interest in the other company's voting stock. In an asset acquisition, the company whose assets were acquired is dissolved. The assets acquired are recorded in the books of acquirer, and consolidation of statement of financial position amounts is automatic. On the other hand, under stock acquisition, the acquired company or the subsidiary remains as a separate legal entity with its own financial statements. While the initial accounting for the two types of acquisitions differ significantly, a 100% stock acquisition and an asset acquisition produces the same consolidated statement of financial position after acquisition. There is, however, a difference if the stock acquisition is less than 100%. Then, there will be a non-controlling interest in the consolidated statement of financial position, which is not possible under asset acquisition. So last chapter doon, na-discuss ang two methods of acquisition. So pwedeng direktang makuha ni buyer ang assets ng another entity. Pwede rin naman makuha ang controlling interest ng other company's voting stocks. So doon sa asset acquisition, or sometimes called as asset purchase, once na makuha ang control sa asset, sa book na ito ni acquirer i-record dahil madidissolve na ang acquiree. Pero sa consolidated statement of financial position, automatic mag-a-appear doon ang amounts. Sa kabilang banda naman, sa stock acquisition, separate entity pa ding maituturing si subsidiary. Hiwalay pa din ang kanyang financial statements. Sabi dito, ang initial accounting, magiging kapansin-pansin ang pagkakaiba nitong asset and stock acquisition. Pero pagdating naman ng consolidation, magiging parehas din ang consolidated statement of financial position. Ngunit, ito ay kung 100% ang stock acquisition. Kasi otherwise, if less than 100%, may mga differences yun. Magkakaroon din ng non-controlling interest sa consolidated statement of financial position, which is impossible kay asset acquisition. Asset acquisition, a brief review. The following illustrations will review an assets acquisition of S company by P company for cash. Part 1 presents the statement of financial position of the two companies just prior to the acquisition. Part 2 shows the entry of P company to record the payment of 100,000 pesos in cash for the net assets of S company. The book values of the assets and liabilities of S company are assumed to be equal to their fair values and no goodwill exists. Part 3 shows the statement of financial position for the combined company. Note that the combined statement of financial position is produced automatically and no consolidation process is necessary. So sa illustration na ito, si S company ang acquiree at si P company naman ng acquirer. Ang method of acquisition na gagamitin ay asset acquisition for cash. Dito sa part 1, ipinapakita ang statement of financial position ng two separate entities bago maganap ang acquisition. Then sa part 2, dito natin makikita ang journal entry record sa pag-acquire ni P company sa net assets ni S company for 100,000 cash, assuming na at fair value na sila. Sa part 3 naman, yung next reporter ang magpapakita ng combined statement of financial position nila. So sabi dito, produce automatically daw ang financial position kasi asset acquisition ang method na ginamit. So, illustration 14-1, part 1, P company and S company statement of financial position, December 1, 2017. For the assets, P company has cash amounting to 230,000, while for S company, there is no cash. For the accounts receivable, P company has 40,000, while S company has 32,000. For the inventory, P company has 50,000, while S company has 20,000. For the equipment at net, P company has 180,000, while S company has 158,000. So the total assets of P company values 500,000, while for S company, the total assets values 210,000. For the liabilities and equity, accounts payable of P company amounted to 280,000, while for S company, it amounted 110,000. For the common stock, P company has 100,000, while S company has 50,000. For the additional trade-in capital, P company has 80,000, while S company has 30,000. And the retained earnings, P company has 40,000, and S company got 20,000. The total liabilities and equity for P company is 500,000, and for S company, the total liabilities and equity is 200,000. So kung makikita nyo, mas mataas yung value ng financial position ni P company over S company. Pero it doesn't matter naman kasi we're just showing the statement of financial position prior to acquisition. So for the part 2, we have to have entry on P company's books to record acquisition of S company's net assets. Ano ba ang mga net assets ni S company na gustong i-acquire ni P company? So we have here cash, accounts receivable, inventory, equipment at net, and syempre kasama yung accounts payable. So debit, accounts receivable, 32,000. Debit inventory, 20,000. And debit equipment, 158,000. And then credit natin si accounts payable, 110,000. Syempre kasi liability siya. And then credit din natin si cash for 100,000 kasi syempre pag in-acquire ni P company, kailangan niya maglabas ng cash. So that's all for me. Continuation for part 3 will follow. Thank you.
Okay. Wag mo muna tanggalin. May tanong lang ako, no? Si Kate. Kate, may tanong lang ako.
Yes po.
Kung sakasakaling, ang pinili ni Company A na ordinary share, DB, ay 46% lang, no? 46% lang ang nabili niya. Pero kahit 46% pa lang siya, no? Yung remaining 46% ang binili. Yung the remaining 54% ay pag-aari ng iba't ibang business entities, no? Pagpalagay natin bawat isa ay tag 10, ano? Tapos yung mga iyon na hindi naman bumili, yung mga maliliit na yon, hindi rin magkasundo, ano? Hindi rin magkasundo. Para ba yung yung presidente ng Pilipinas, naging presidente ang botong nakuha niya 40%. Tapos yung kanya mga kalaban mga 20% lang. Hindi siya pa rin ang presidente, no? Ang tanong ko, Kate, yung ba aking nabiling 46%, kung mapapatunayang ako may yung 46% ko ang controlling interest. Am I, as a buyer, am I required to prepare consolidated financial statements?
Siguro sir, hindi po required kasi wala naman po siyang control over the other kasi less than 50% lang po yung na-acquire niya.
Hindi, sabi ko, nagkaroon ng evidence and judgment, opinion, may mga facts na I am in control. Am I required to prepare consolidated financial statements? Kahit na,
Yes sir, kung may
so, you mean the most important thing is the presence of control?
yes sir, nabanggit po dito sa chapter 14.
Okay. So, I agree, no? I agree. And then may nabanggit kang for example, acquirer, na-dissolve yung acquiree kasi binili niya yung net assets, no? Yung net assets. So, nawala na si acquiree. Okay. So, in that case, meron pa rin consolidation nangyari, no? Kaya lang, kung ang ibig sabihin ng consolidation process, masabi natin walang consolidation process, pero nagkaroon ng consolidation. Anong ibig ko sabihin? Kapag sinabing consolidation process, gagawa ka ng consolidated working paper. Pero sa case na binili ng acquirer, yung acquiree, yung kanyang net assets, at tapos nawala si acquiree na dissolve, ay hindi na kailangan doon ng consolidation working paper. Hindi na kailangan doon. So, hindi na kailangan doon ng consolidation process. Kung ibig sabihin ng consolidation process, ay mag-prepare ka ng consolidation working paper. Pero kahit walang consolidation process at walang consolidation working paper, nagkaroon ng consolidation. At ang sabi diyan, in that case, in the absence of consolidation working paper, in the absence of consolidation process, in that case, acquirer, binili yung 100% net identifiable assets ng B, nagkaroon ng automatic consolidation. Kung meron consolidation, wala nga lang consolidation process. Walang consolidation working paper. Pero sabi dyan, nagkaroon ng automatic consolidation. Okay. Now, yung no consolidation process is necessary, nakuha ko lang dyan. Tapos yung consolidation is automatic, nakuha ko rin dyan. Di ba? Class, any question at this point? Kaitan, may ano ka ba? Any concern, question regarding the material due?
Wala na po sir.
Wala. Okay. So, yan ang consolidation. Patutunan natin ang consolidation procedure kasi merong consolidated working paper, merong elimination entries. Okay. So, those automatic consolidation, ay wala tong elimination entries. Hindi mo kailangan ng consolidation working paper kahit pa nagkaroon ng automatic consolidation. Okay. So, we go to the next. Maderas, no?
Yes po. Wait lang po. So for the continuation, this is the part 3. P Company Statement of Financial Position subsequent to net asset acquisition December 1, 2017. Assets, current assets, cash na may 130,000, accounts receivable na 72,000, inventory 70,000, total current assets na 272,000. Non-current assets, equipment 338,000, total assets na 610,000. Liabilities and owner's equity, current liabilities, accounts payable 390,000, stockholders equity na may common stock na 100,000, additional paid in capital na 80,000, retained earnings na 40,000 with a total of 220,000. Then add natin yung total liabilities at total equity and it would give us 610,000. So mapapansin niyo po dito na yung amount ng cash, account receivable, inventory, equipment, and account receivable po ay nagbago. Compare po dun sa statement of financial position na pinresent kanina. It's because po dun sa entry na ginawa natin kanina sa part 2 kasi na inacquire na po ni P Company yung net assets ni S Company. Kaya po nabawasan na ng 100,000 yung cash ni P Company. Naging 130,000 na po siya. Tapos po dun sa accounts receivable, naging 72,000 na po siya from 40,000. Gawa din po ng journal entry kanina. Tapos yung inventory from 50,000, nagkaroon po tayo ng entry doon na 20,000, kaya naging 70,000 na po siya. Tapos yung equipment na 180,000, nagkaroon po tayo ng journal entry kanina na debit na 158,000, kaya siya naging 338,000. Then yung accounts payable naman po na from 280,000, nag-increase po siya ng 110,000, kaya po siya naging 320,000. Next slide. Stock acquisition. Assuming the same facts as
Nawala ka, Patricia.
except
Nawala ka.
we will acquire all of the outstanding. Po?
Sapi
Wala
ang,
po.
sapi ang dating
Stock
mo.
acquisition po. Assuming the same facts as those in illustration. Ay, sorry sir, baka po sa signal. Okay na po.
Ha? Chap-chapi?
Okay na
Sige.
po. Assuming the same facts as those in illustration 14-1, except that P Company will acquire all of the outstanding stock of S Company from its stockholders, usually through a stockbroker for 100,000. P Company records the acquisition on its books with the following entry on the date of acquisition. So magkakaroon po tayo ng entry na investment in S Company na 100,000, then credit po na cash na 100,000 since nagkaroon po tayo ng acquisition of net assets. So dito po makikita natin yung stockbroker. So additional infos lang po. Yung stockbroker, sila yung mga financial professional who executes orders in the market on behalf of clients. Sila po yung mga registered representatives or an investment advisor. So to continue, procedural explanations for the preparation of consolidated statement of financial position on the date of acquisition are illustrated in the pages that follow. Consolidated Statement of Financial Position, Date of Acquisition. A series of examples that follow will illustrate the preparation of consolidated statement of financial position in various that might arise in acquisition of stock. In each case, P Company acquires all or part of the common stock of S Company. The acquisition may be at book value or at other than book value. Acquisition of a wholly owned subsidiary. A subsidiary is said to be a fully owned subsidiary when the parent company acquires all of its outstanding common stock from the present shareholders. To illustrate the preparation of consolidated statement of financial position under this case, the statement of financial position of P company and S company in part 1 of illustration 14-1 will be used. So dito po si P company yung acquire po ni S company. Siya yung bumili ng net assets ni S company. So case 1, acquisition at book value. The acquisition of a subsidiary is said to be at book value when the consideration given, price paid for the investment in the subsidiary is equal to the book value of interest acquired from the subsidiary. Subsidiary stockholders equity times parent company. In this case po, P company acquires all of S company's outstanding common stock for 100,000 cash. The consideration given of 100,000 is equal to the value of subsidiary's net assets as shown below. So consideration given, yung price paid po is yung 100,000 less book value of interest acquired 50%. Common stock ni S company ay 50,000. Additional paid-in capital ni S company 30,000. Retained earnings ni S company ay 20,000 with a total of 100,000. Kaya yung excess po ay 0. After posting the entry in the preceding page regarding the stock acquisition in the books of P company, separate statement of financial position of P company and S company immediately after the acquisition is presented in illustration 14-2. Note that only the statement of financial position has changed to reflect the 100,000 reduction in cash and the recording of the investment in S company account for the same amount. Illustration 14-2, P company and S company statement of financial position. Ito na po yung statement of financial position ni P company at S company. Ito po yung cash na may 130,000 sa P company kay S company. Account receivable na 40,000 kay P company, 30,000 kay S company. Inventory na 50,000 kay P company plus 20 kay S company. Equipment kay P company na 180,000 then 158,000 naman po kay S company. Investment in S company stock 100,000 kay P company with a total of 500,000 kay P company then 210,000 kay S company. Yung investment in S company stock po ni P company, yun yung ginamit niya ang bili ng net assets po kay S company. Liabilities and stockholders equity, accounts payable, 280,000 kay P company then 110,000 kay S company. Common stock na 100,000 kay P company then 50,000 kay S company. Additional paid-in capital 80,000 then 30,000 kay S company. Retained earnings 40,000 kay P company then 20,000 naman kay S company. So total liabilities ni P company ay 500,000 tapos 110,000 kay S company.
Patricia, nawala ka na. Okay.
Working paper elimination entry. Before the preparation of the consolidated statement of financial position, the investment in S company account balance should be eliminated because the two companies will be treated as one. So, kanina po diniscuss na to ni Ate Kate na yung yung investment ni S company account balance ay may eliminate na kasi si S company at P company ay iisa na since nabili na siya ni P company. So similarly, the subsidiary stockholders equity accounts are eliminated because its assets and liabilities belong to the parent na, not to outside equity owners po. This is accomplished by the following elimination entry in consolidated working paper. So ito po yung entry pag i-eliminate na yung investment account balance sa S company para mapunta na siya kay parent po. Common stocks S company, additional paid in capital 50,000, retained earnings ni S company na 30,000 at investment ni S company na 20,000. Take
Ay,
note,
teka muna, Patricia. Patricia,
po,
mali naman ata pagkakakopya mo sa libro eh. So, nasa elimination entry tayo, ano?
opo,
Magka-cancel tayo, magka-cancel. So, meron tayong i-eliminate o i-cancel doon sa libro ng subsidiary equity accounts.
opo,
So,
ni S company.
sa ating elimination entry, para ma-eliminate yon, ma-cancel yon, ide-debit mo yung elimination entry. So, dapat debit common stock S company for 50,000,
100. Ay, hindi lang po siguro na type 2.
debit additional paid in capital ng S company 30,000, i-debit the retained earnings ng S company for 20,000. Magkano lahat yung naka-debit? 100.
Opo,
Tapos, yung libro ng invest ng acquirer, meron naman siya naka-debit na investment in S company 100.
opo, kanina.
I-eliminate mo yon sa iyong elimination journal entry. Yun naman ang i-credit mo. You credit the investment in S company worth 100,000. So yun ang nag-a-appear sa sa libro. Tama yon. Yung pinakikita mo sa amin, mali. Oo.
Wait po, check ko lang.
Oo. Okay. Hawak mo ba yung iyong picture?
Opo,
Oh, di ba mali yan?
opo, that po yung naka-debit yung common stock, tapos additional paid in at retained earnings, tapos
Oh,
naka-credit
mali yan.
investment in.
Mali yung pinakikita mo sa aming elimination journal entry. Oo. Dapat yan
Tama
naka-credit.
ko na.
Investment in S company for 100,000. Okay. So, audience, check na lang yun sa picture, ano?
Send ko na lang po.
Yung picture hindi ganyan. Oo. Okay, continue.
Take note that the above elimination entry decreases to zero the investment in S company account of company and the three stockholders' equity accounts of S company. In the cases that follow, all working paper elimination entries are numbered sequentially. To avoid confusing the elimination entries with journal entries that appear on the separate books of the parent or subsidiary, all working elimination entries is appearing in the texts are designated by an entry preceded by an E. Consolidation working paper. The working paper showing the elimination entry appears below. Illustration 14-3. The first two columns of the working paper present a statement of financial position of P company and S company taken from illustration 14-2. The balances of like accounts are placed side by side so that they may be easily added together. Ito po yung itsura niya. Pag pinakita na po yung consolidation working paper ni P company and S company, yung first two columns po, yun yung financial position ng dalawang company. Then yung 3 to 4 columns po, ito po yung elimination na ito yung entry po natin kanina sa yung una pong entry sa working elimination entry, yun po yun. Tapos para ma-consolidate po natin siya ng maayos, kailan po siya naka-table na ganito. So cash po, 130,000. Accounts receivable, 40,000. 32,000 naman kay S company with a total of 72,000. Inventory na 50,000. Kay P company din, S company na 20,000 with a total of 70,000 pag kinonsolidate na natin. Then, equipment net na 180,000 plus 158,000 ni as company with a total of 338,000. Investment in as company 100,000. And total asset po natin kay P company ay 500,000 din kay as po. Plus as company ay 210,000. So, total po ng consolidated natin ay 610,000 po. Accounts payable, 280,000 kay P company, tapos kay S company ay 110,000. Pag kinonsolidate na po natin sila, 390,000 po yung total. Tapos, common stock naman ni P company ay 100,000, then kay S company naman ay 50,000. Additional paid in stock ni P company ay 80,000, kay S company naman ay 50,000. Earnings ni P company ay 40,000, tapos po ni S company ay 20,000. So total liability ni P company ay 500,000, 210 kay S company. Tapos po, pag kinonsolidate natin, ang total po nila ay 610,000. The following features of the working paper for consolidated statement of financial position on the date of acquisition should be emphasized. First, the elimination entry is not recorded in either the parent companies or the subsidiaries accounting records. It is only a part of the working paper for the preparation of the consolidated statement of financial position. Next po is the consolidated paid-in capital amounts are those of the parent company only. Subsidiaries paid-in capital amounts always are eliminated in the process of consolidation. So, yung pag-elimination entry na daw po, hindi daw po ito nire-record sa parent company at kay subsidiary accounting records kasi po, parang hindi na siya kailangan. Kumbaga, part lang siya ng working paper para sa preparation ng consolidated statement of financial position.
Okay. Tapos na ba yan? Okay. So, what are the important views na nakita natin? Ang itsura ng consolidated working paper, no? Papag-add mo yung statement of financial position noong acquirer and acquiree. Kaya dapat magkadikit, madali ang addition. Tapos mag-i-insert ka ng working paper columns. Kasi doon mo ilalagay yung iyong mga elimination entries. At ang una natin nakitang elimination entry is the elimination of investment in subsidiary account ng parent, tapos yung mga equity accounts ng acquiree. Okay? So, nakita na tayo na isa na consolidation paper, working paper elimination entry. Okay. So, we continue. Third speaker this evening.
Wait lang po. Mamaya ka, mama. Okay na po ba?
Parang yan mo na count, diba? Yan. Yun.
Okay na po. Greetings everyone. I will continue the discussion of the last reporter. Number 3, consolidated retained earnings include only the retained earnings of the parent company. This is in accordance with the principle that acquisition accounting reflects a fresh start after acquisition of stock and not a combining of existing stockholders' interest. Dito po pinagsama-sama yung mga na-remain na profit ng isang kumpanya. Alin siya dito sa principle ng acquisition accounting na sumasalamin sa mga sariwang simula pagkatapos ng pagkuha ng stock at hindi pagsama-sama ng
interest ng mga stockholder. Number 4, the amounts in the consolidated column reflects the financial position of a single economic entity comprising two legal entities. After eliminating all intercompany balances, take note that these are exactly the same as in the statement of financial position prepared after the acquisition of asset, part 3 of illustration 14-1. Ang halaga ng pinagsama-samang column ay nagpapakita ng financial position ng isang company na isang entity na binubuo ng dalawang entity. Pagkatapos alisin ng balanse ng isang intercompany, kailangan tanda na palaging dapat ito ay magkapareho sa financial position. Consolidated statement of financial position. The amounts in the consolidated column of the working paper are presented in the usual manner in the consolidated statement of financial position of P company and its subsidiary S company as follows. Dito po pinagsama-sama yung mga halaga sa isang working paper na pinapakita na sa isang karaniwan ng isang financial position. Illustration 14-4, P Company and Subsidiary, Consolidated Statement of Financial Position, December 1, 2017, Assets, Current Assets, Cash, worth of 130,000, Accounts Receivable, 72,000, Inventory, 70,000, with a total current assets of 272,000. Non-current assets, equipment, 338,000. The total assets will be 610,000 pinag-plus yung total current asset at yung equipment. Liabilities and equity, current liabilities, accounts payable, 390,000. Stockholders' equity, common stock, 100,000. Additional paid in capital, 80,000. Retained earnings, 40,000 with a total of 220,000. The total liabilities and equity is equal to 610,000. Case 2, acquisition at more than book value. And the book values of the net asset of the subsidiary are equal to their fair values and the consideration given or price paid is more than the book value of interest acquired from the subsidiary, the excess is treated as goodwill. Kapag ang book value ng isang net asset ng isang subsidiary ay katumbas ng isang fair values na ibinibigay ng konsiderasyon o presyo na binayaran ay higit pa sa halaga ng book value ng interest na nakuha mula sa subsidiary. Sa makatuwid, ang labis na halaga ay kikilalanin bilang goodwill. Illustration, assume that P Company acquires 100% of S Company's outstanding common stock for 110,000 in cash on December 1, 2017. Dito, i-assume na natin na nakuha ng P Company ang 100% na natitirang common stock ng S Company sa halagang 110,000. On the date of acquisition, P Company records the acquisition of stock on its books with the following entry: debit, investment in S Company, 110,000. Credit, cash, 110,000. After the above entries has been posted, the affected asset accounts of P Company are as follows. Sunod na i-entry ang mga apektado ng asset account ng P Company. Cash, 120,000. Investment in S Company, 110,000. The excess of the consideration given over the book value of interest acquired is computed below. Consideration given, price paid, 110,000, less book value of interest acquired, common stock, S Company, 50,000, APIC, S Company, 30,000, retained earnings, S Company, 20,000 with a total of 100,000, goodwill, ipagmaminus lamang yung consideration given, which is the 110,000 sa 100,000 is equal to 10,000. The resulting excess is usually due to two factors: the difference between the book value of the subsidiary's assets and or liabilities and their fair values, and the existence of goodwill in the subsidiary company Since the book value of the net assets in this example is equal to their fair values, the excess is treated as goodwill. Ang isa dito ay ang pagkakaiba ng book value sa isang subsidiary, assets at liabilities at sa fair value. At yung isa naman po ay ang pagkakaroon ng goodwill sa isang subsidiary company. Ang book value ng isang net assets ay halimbawa na may equal na fair value at ang sobra naman ay makikilala bilang goodwill. Working paper elimination entries. After the computation of the excess or goodwill, the elimination entry to be debit posted in consolidation working paper common stock S company 50,000, debit additional paid in capital S company 30,000, retained earnings S company 20,000, debit goodwill 10,000, and the credit is the investment in S company 110,000. Consolidation working paper. The working paper showing the above elimination entry is presented below. Illustration 14-5. P Company and Subsidiary Consolidation Working Paper, December 1, 2017. Assets, cash, P Company 120,000, S Company none. Tapos i-record to sa consolidated as 120,000. Accounts receivable, P Company 40,000, S Company 32,000, at i-record to sa consolidated as 72,000 na pinag-plus yung dalawang amount. Inventory, P Company 50,000, S Company 20,000. In consolidated, same process lang po, 70,000 yung equal. Equipment, net P Company 180,000, S Company 158,000. In consolidated is equal to 338,000. Goodwill, i-enter to sa elimination debit 10,000 at sa consolidated 10,000. Investment in S Company, P Company 110,000 at i-enter to sa eliminations credit 110,000. With the total assets of P Company 500,000, S Company 210,000, in consolidated with a total of 610,000. Liabilities and equity, accounts payable, P Company 280,000, S Company 110,000, in consolidated with a total of 390,000. Common stock, P Company 100,000, i-entry to sa consolidated. While the S Company 50,000 ay i-entry sa eliminations debit dahil ito yung i-eliminate. 50,000. Additional paid in capital, P Company 80,000, i-entry sa consolidated 80,000, S Company 30,000 na i-entry sa eliminations debit 30,000. Retained earnings P Company 40,000, i-entry sa consolidated 40,000, S Company 20,000 na i-entry din sa eliminations debit 20,000. Total liabilities and equity P Company is equal to 500,000, S Company 210,000, in eliminations debit 110,000, eliminations credit 110,000, in consolidated with a total of 610,000. An analysis of the consolidation working paper, illustration 14-5, reveals the following. P Company's investment in S Company account is eliminated. Number 2, the stockholders' equity account of S Company is eliminated. Number 3, goodwill in the amount of 10,000 as computed is inserted as an asset in the consolidated column na pinapakita naman sa pinaka-illustration. Number 4, the assets and liabilities of S Company are combined with those of P Company to arrive at the consolidated balances. Number 5, only P Company stockholders' equity accounts are extended in the consolidated column. Consolidated Statement of Financial Position. The formal consolidated statement of financial position resulting from the 100% acquisition of S Company taken from the consolidated column of the consolidation working paper is presented below. Dito naman po, pinagsama-sama na lahat yung financial statement mula sa 100% hanggang sa working paper. Illustration 14-6, P Company and Subsidiary, Consolidated Statement of Financial Position, December 1, 2017, Assets, Current Assets, Cash, 120,000, Accounts Receivable, 72,000, Inventory, 70,000 with a total current assets of 262,000. Non-current assets, equipment 338,000, goodwill 10,000 with the total non-current assets 348,000. The total assets is 610,000. Liabilities and equity, accounts payable 390,000, stockholders equity, common stock 100,000, additional paid in capital 80,000, retained earnings 40,000 with a total stockholders equity of 220,000 and the total liabilities and equity is 610,000. Yun lang po.
May tanong ako.
Up.
May tanong ako. Dalhin mo kami doon sa case 2 illustration. Case 2 illustration. Ibaba mo konti. Ang tanong ko sa iyo, diba ito? Kausap ko sa buwa. May nakita ko diyang 120,000 cash. Di ba investment in S company, 110,000. Paano nakuha yung cash na yung 120,000?
Ano po ulit? Saan
Yan no?
100.
After the above entries has been posted, the
Hmm.
affected asset accounts of P company are as follows. Cash, 120,000. Investment, 110,000. Ano po lang? Ano lumabas yung 120,000 na yun? Saan ang galing? Investment 110. Kitang-kita, no? Very obvious. Yung cash 120. Anong galing yun?
Hindi lang po ako siya sasagot ko. Hindi lang po ako siya sasagot.
Hindi mo na hinanap. Ito
Opo.
ang sagot. Doon sa earlier reports, sa libro, page 55, so hindi pa nagkakabilihan, ang cash amounts to 230. Kaya mga illustration ngayon, kapatid ng mga previous illustrations, ay hindi pa nagkakabilihan ang cost down ni 230. Ngayon, sa illustration mo, ay mapasipig ng 110. Kung magkano na ang natira ni Pinkas, ay di
120 po.
230 minus
110, 120.
120. Yan. Sasagot mo lang yan kung kabuklat mo yung mga earlier reports. Kasi sa umpisa, nung hindi pa bumibili si P, meron na siyang cash na 230. Ngayon, diyan sa iyo, nagpahit siya ng 110. Kaya nag-120 na lang. Cash ni P. Pakita mo sa amin yung picture.
Po.
Yung picture mo. Yan. Buwa. Kilala mo si Marie Christine, Buwa?
Po?
Si Marie Christine, kilala mo?
Hindi po.
Hindi ko kilala si Marie Christine. Marie Christine, Austria.
Hindi po. Hindi po.
Yung mga graduate na PSA ngayon,
Hindi ko po matandaan pero familiar po.
oo. Nung nag-lecture ako sa kanila, no? Ako rin nagtuturo ng business combination no? Ito sa puntong ito, alam mo, ang pinakita ko sa kanila, ito yung ginawa ko ito, in-live ko yan. Gamit yung insert tables, at saka para magkasya, gumamit ako ng mas maliit na font size. Kapag naman kinanon mo, tapos inilagnify mo yan sa presentation, makikita pa rin yung pinaliit mong font size, ano? Ibig sabihin, it took my time and effort to come up with nilitype ko yan, insert tables and then smaller font size. Ngayon, pinakikitaan mo ako ng picture mo, ay siya, pabawasan ko yung score mo. May picture ka yan, titype ko yan Oo. Tapos kapag may picture, pabawasan sa score
Po.
Do you have any question, class? Okay. Wala na? Anong oras? And then the continuation bukas. Oo. Sino magkasalita ba bukas? Si Lat, Mary Rose, at saka yung reviewer. No? Bukas meron tayong reviewer. Represent ni De Los Santos. No? Kaya lang, ang time ata natin bukas, 8 to 9:30. Dahil sa uwi pa kayo ng bahay, after your face-to-face. Sige, di maghihintay ako, tutulog muna ako bago ako mag-lecture bukas. Makinig sa inyong mga share na nabasa, natutunan. Okay, so wala nang so we close the evening and wait for another evening tomorrow. So as usual, ating gagawin, buksan ang mga camera for our screenshot attendance. Wala kayong mga tanong? Okay. Teka ha. Ano yan? Ang ating photographer ngayon ay si Nosidan. Nandiyan ka ba? Asa si Nosidan? Hindi ko makita. Nosidan. Ba't nawala si Nosidan? Ayun! Oo. Sige, just say 1, 2, 3. And let's bye-bye today evening.
Game na po.
Maganda. Let's say 1, 2, 3. Kate Ann, magaling mag-report ka, Kate.
1, 2, 3.
Okay. Tapos na. Magaling mag-report si Kate Ann. Kate Ann.
Po.
Na-impress ako sa iyong reporting,
Thank you po.
Oo. Hintayin natin yung ano, no? Yung ring alarm ng cellphone. Ito si ano, Ray, nandiyan ka pa ba? Yung bang face-to-face nyo bukas, permanente na yon? Hindi. Okay. Ayun, nag-alarm. Okay. Yes. Bye-bye. Till we meet again tomorrow evening for the continuation of our lesson. Bye-bye.
Thank you po, sir.
Yes,
Ito po, sir.